Hey, John. Yes, we do have a slew of headlines crossing the Bloomberg terminal right now on Snap. Snap says current quarter revenue gains at 8% below goals. They're also saying that they will cut 20% of their workforce, slashing projects to refocus. They have also appointed Jerry Hunter as the COO, while the CBO leaves for Netflix. So essentially, Snap will cut 20% of its workforce, slash investments, add a new CEO, COO. The stock is absolutely tumbling on this. And of course, John, the backdrop on this is a weak ad backdrop, ad revenue spending. Pullback in spending from advertisers on its platform has crippled Snap's sales growth this year, again, causing this company to slash roughly 1,300 jobs of the 6,500 and bring its sales outlook down to 8% from 13%. The stock is tumbling on top of a greater than 70% loss into today on the year.
Cutting 20% of the workforce, that's absolutely brutal. Abby, your read on this. We've talked about this company so many times this year. Industry problem or company execution problem?
Probably a little bit of both, but I think the thing that stands out the most, John, is if you recall back in April, it was a very sudden turn, not just for Snap, but for the industry in general, where it seemed as though advertisers online were all of a sudden pulling back. So companies that had reported decent first quarters were all of a sudden pulling their guidance. This seems to be a reflection of that. And of course, we are technically in a recession, 2 quarters of GDP growth down in a row. That tends to bring on these sorts of layoffs. I wouldn't be surprised if we continue to see more announcements of this line. But it is pretty dramatic. 20% is not a small number, 1,300 people, and it really suggests that this company is refocusing their efforts in this more challenging macro environment.
Stock is all over the place in the pre-market. Abby, thank you. Very briefly positive now, up by about 1/10 of 1% after being down about 9 or 10%.